This is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today I'm here with William Davis of LDJ Capital. William, thank you for joining us.
It is my pleasure. How are you doing today?
I'm doing great. Thank you for being here. And so how did you get into the venture world?
Well, it was really and probably a unique story in the sense that I started off as a pure technologist. I was an artificial intelligence developer, and then I ended up going up the stack of technology development and eventually became a CIO and then ultimately a CEO. And what occurred was I was advising a lot of the institutional and venture capital funds in New York City specifically around what good technology investments are, how to vet them, how to understand what's happening in the future. And Goldman Sachs gave me a call and said they had an interest in Europe and if I could go over and take a look. And I did so. And it was a mobile payment company based in Vienna, Austria in 2011. And they were having some challenges with the mobile payments, et cetera, and kind of walked them through the stack and what I thought success looked like. And they asked me to be the CEO. And then what we did from there, turned the company around. We created the most promising stack in the space, and we became the number one mobile payment company in Europe. I saw this as an opportunity. I came back to the United States, went to Silicon Valley, and I met with companies like Visa, Facebook, IMView, Zania, and 10 of the leading technology companies in 2011 and 2012. And I brought them onto the platform, and we became the unique monetization vehicle and payment gateway for those platforms and their digital assets in Europe. And so we became the hottest guys in Europe doing this stuff. And the Bitcoin developers gave me a call. And they said, hey, you guys are in 50 countries. Why don't you utilize our mechanism as a payment mechanism and see if people like it? Decided to do that. And that was when the world changed. And when I say the world changed, we had incredible learnings from the new customers that were utilizing this as a payment gateway, their behaviors, what they were expecting from the future. And I came back to New York, got some partners, and created a small fintech private equity firm and ready to move forward in the space. So that's the beginning. There's a part two to that, but that's the beginning. That was the entry point.
Well, that's great. You sound like you had a rich experience there with it and got in early as well. You work with LDJ Capital. Can you tell us more about what you guys do there?
Absolutely. So David Drake actually met me in Europe while I was running that company, and I came back. He became one of the initial investors and participants. And we were watching this thing ideally grow, but it was doing it very slowly. And he asked me to step out and join him in his family office. It took a little time, but I did so. And the family office at that time was doing a lot of traditional family office types investments from real estate, mining, minerals, etc. But he also always had a vision for believing in this virtual space and what was going on. So the beginning of last year, he stepped in a little further. He went to Europe, and I maintain an office in South America, went to South America, and I came back with one prospective client, and he came back with 50 clients and started to advise them and tried to make sure that everything seemed good as we began to move forward in the space. And next thing you know, we noticed that the company started raising $1 million, $2 million, et cetera. We started giving them access to the family offices and road shows. And then from June to September, that $1 to $2 million went to $100 million. I said, this is interesting. Then we started adding some of the other services and properties that we had in the portfolio for media, et cetera. And then the next thing you know, that $100 million went to $1 billion and $22.5 billion in market cap by the end of 2017. And that was really how we entered into the space and became the largest advisors in New York City. After that, created a Cayman fund, and we started doing follow-on investments into the ICOs that we thought were promising and that met our criteria.
Well, you've got quite a history there with the crypto. Can you tell us a little bit about how we got to where we are and where you think it's going?
Sure. So, in my opinion, the world really began from a material standpoint when hotels and airlines began issuing points as rewards for their most loyal customers. And then those points became a stored value for things that people enjoy doing anyway. And then you have the ability to pay for points directly, and you were in a locked in ecosystem that effectively made the customer extremely loyal because those points were as important to them as sometimes their initial travel. So people started becoming accustomed to having a point system with loyalty. The second piece occurs when the new generation of participants, and I call them what we call the crypto millionaires and the kids in the gaming industry, started realizing that we don't really need fiat to enjoy our days. If we're able to get online, play our video games, go through the reward system in the video games and buy gold coins and swords and all of those things in a micropayment method, they can enjoy their experiences, they could learn, they could gamify some of the other interfaces with the software applications that they were doing. And literally, this became in itself a culture of utilizing digital coins, virtual coins, and now this closed-in tokenized ecosystem that people began enjoying. One of the messages and one of the learnings from my early experiences was that not only did they enjoy it, but they preferred utilizing digital points as opposed to fiat currency for their activity, actually to the point almost of 3-to-1. So you give a child or a young person a budget in digital currency and allow them say, hey, you can go ahead and spend in this digital ecosystem what you would like. They're absolutely happy, and they will build worlds around that. And they'll have no need for fiat except for perhaps to eat and drink, even if they need to do that. And these are the kids that we see that are locked in their room. We're trying to figure out what they're doing. This is what they're doing. This is what all of them are doing, working with each other, communicating with each other, et cetera. So those learnings became important and said, hey, if they're beginning to do this with themselves and they're comfortable with this, what would occur if the entire economy worked in the same method? And that's what I think we're seeing today, because the leadership in this space has literally come from that crypto millennial generation, and they're disrupting the legacy worlds that all of us are living in.
So where do you see it going from here? It's gone through a lot of changes. It's a very dynamic space. We had a very rough ride in 2017 as far as Bitcoin going way up and then crashing back down, and all the scams and things that went on with the ICOs. But where do you think we're going from here?
So, and that's a very, very good question. And I think what we observe and what has happened with this, with the popularity, is that the cart has come before the horse, that the marketplace for crypto has matured faster than the dApps and other things that are built on blockchain's foundations. And as a result, people have gotten ahead of themselves in terms of trying to understand what the future is going to look like and who are they, and I hate to use this term, Ronald, who they want to invest in terms of who will be the leaders in the future. So what I think is absolutely clear is that there is a marketplace today. The volatility goes with the territory. But at the same time, what we do understand is there's a preference to do it. More important, in my opinion, than the volatility and the challenges we've seen is the resilience we've seen. Even with the popularized hacks in Japan and Mt. Gox and some of the wallets that have been attacked, there has been no slowdown of entry into the space. And literally, it began with individuals, small organizations, nonprofit organizations that built out an ecosystem around this. Now, within the last 2 weeks, we've had the Rockefeller family joining, the Soros family joining, really institutional money that has a responsibility and a fiduciary responsibility to investors are saying, hey, guys, we're going this path, join us. And now I think the entire world is opening up to it. So clearly, blockchain is the foundation, distributed ledger computing moving forward. It may replace and at its minimum, augment the database structure and the storage of information and provide more security in the identification and the management of privacy of individuals' information and create new paradigms and new industries that disrupt almost every industry sector that we've seen in the horizon, because there's nothing that has not been untouched. So I think the economy is going to change. I think we need to look at, as opposed to the level of comfort we as Americans have with utilizing dollars and the traditional assets to do purchasing and to value our net worth and build on our legacies, that there are going to be new currencies. And those currencies include coins and the derivatives of those coins. And in order to participate in some of the things that we will begin to enjoy, we're going to have to participate in the tokenized economy, because the thing about a tokenized economy, if you do not participate and you do not purchase the currencies, you can't play. You're not in the game. And that's going to matter. If we think all the way back to, for those of us that are senior, think about pinball games. And I had experiences at Coney Island where we wanted to play games, and initially used to give them a quarter and you can play the game, and everyone was happy. But then they shut that down. They forced you to buy the tokens tied to the park or the ecosystem that you were participating in. So if you wanted to play pinball, instead of putting a quarter, you had to put $1 in the machine and get 4 or 5 of their coins out and put that into the machine. And then the machine gave you rewards of more coins. Now, through their exchange, their storefront at that point in time, you were able to cash out into the crypto that you came in, but you could not participate in that ecosystem without those coins. So I think we're going to see that principle applied to many, many formats of the economy that we're participating.
So where do you see ICOs coming? You know, we had kind of a wild ride last year where everyone talked about a utility token until the SEC came in and declared everything a security token. And it seems like we're back at doing standard Reg D offerings like we've done for many, many years now. But where do you think ICOs are going to go for the future, given where the SEC is, but where the demand is from investors to be a part of these things?
So, and that's a very, very good question. So if we look at some of the data and understand what has occurred up until this point globally. So when we looked at cryptocurrencies, mobile payments, and those two are correlated, in my opinion, because mobile payments are the largest sector of the cryptocurrency money movement today. And that includes remittances and paying taxis, vending machines, et cetera, globally. That at the end of 2016, $1 trillion worth of transactions occurred in the world outside of the United States. The rest of the world has moved forward. Because our legacy systems in the US work so well, our credit cards, our bank accounts, and the luxury of us being first in this first world financial system, we haven't had a need necessarily to move forward with those types of payment structures and or those currencies. However, when we look at the 50 new larger cities that will be growing up over the next 20 to 30 years, they all will be built out on these frameworks. So effectively, this will be the methodology of choice around the world. Sitting in the United States, I think we'll be selective in trying to participate how we want to play moving forward. And the utility of those things will be clear and evident in terms of the features and functionality. Now, given the investment environment that we're in today, even though the statements that have been made in that the view of most tokens as being securities in the United States today, I think was the leading statement to do one of the things that investors in the US are really, really concerned about, and that's fraud and shaking out the bad actors and the bad players. But simultaneously, in individual interviews and conversations in the regulatory environment, and I'm part of the crypto working group in New York City, who is contributing to the thought around legislation as we move forward, is that the regulators at the same time understand that this is the burgeoning of a new industry and innovation, and they do not want to get in the way of that simultaneously. So I think they have a very delicate position of balancing their primary goal of protecting investors, but simultaneously not thwarting innovation. And I want to think over time they will get it. You know, we at LDJ are doing a number of things. We're supporting East-West initiatives, bringing Asian companies, Asian investors to the U.S. in order to get views of what we're doing here. We're taking a look at doing there. And I think over time, all of it will balance out. In the short term, we're going to have volatility, with everything from regulation to the pricing of cryptocurrencies, the valuation of cryptocurrencies. But I think from my personal perspective, and this is certainly not from the organizations or maybe not even a common opinion in the industry, I think the success of ICOs in their ability to bring capital into this new infrastructure or the new infrastructure-based companies has kind of gotten us ahead of where it perhaps needs to fit into the normal capital raising structure. And what I mean by that is I think we're going to see a second round of ICOs that will begin to occur in what I'm calling reverse ICOs with companies that exist, that companies that have customers, they have revenue, and that you can do due diligence in a traditional equity underwriting methodology. And that they will continue to raise equity capital. And before they get to the stage of raising large stakes of capital and or doing an IPO, but where their business model has been proven, the customers are satisfied with what they're doing, the future looks bright, I think they'll begin to do ICOs then, because I think ICOs will have a bigger advantage to the purchaser of those tokens at that stage than they do at the beginning. And what I mean by that is because the model has been proven and you have the customers of your model, of your company, already as raving fans of what you're doing, they will be the ones to invest and literally create the viral buzz that's needed to grow your company beyond the borders that it's contained in right now. So that additional capital will be raised for the need of growing that company, ideally in an international space, and that the model has already been proven with good customers. So now people can see the true value of that coin in a marketplace that's proven by strong companies. And I think you'll have a lot of companies going into that probably beginning, and I'll say the second half of 2018 through perpetuity.
I see what you're saying, because I have people coming to me now saying I may skip that next VC raise and do an ICO instead, because you can control the terms with an ICO. You price it, you put it out there, and people buy it or they don't. With the VC, you go through certain rounds of dilution, and it's just hard to get out of that. And at the same time, I see VCs coming in very early on potential ICOs to get an equity stake, knowing that the company will then later raise ICO money, and that's money the VC doesn't have to put in. So it's interesting to see the VC and the end user swap places. Angels used to invest in the early stage, VCs later stage. Now it comes where the VC invests in the earlier stage and the ICO or individuals are putting money in at the later stage. And it'd be interesting to see how that works out.
No, I totally agree with you. But in addition to, and don't get me wrong, and I know there's another element to this that we really aren't discussing. And because, in the financial world, we've always been focused on value, ownership, and the growth of those things in financial terms significantly. But I think what's happening here, and a lot of the leadership that I meet in ICOs have a impact state of mind about what they're trying to accomplish. And this begins with the greening of America, the value of the world, and the value of creating a better place for everyone, where at some level, the need to own more, to control more, to grow more for personal gain decreases, and the ability to contribute more to the ecosystem increases. So I'm going to argue that that dilution at the front end of ownership and your raising of capital perhaps is a good thing from the standpoint of creating customer value, creating value of your company for your eventual ICO. Because what that will bring, ideally, is more on into the company, better advisors, and more importantly, what a lot of ICOs are missing today, good governance. And I think when you start with those things, I don't care about how much equity if I own. If I'm doing my ICO and I'm sitting on a $1 billion foundation of good customers with a good company, because then when we create the value for the ICO and I maintain my coin as a founder of the company and share that coin with the rest of the world, I get that liquid value in the coin, because the first half of the creation was done in a way with such structure and such rigidity and such diligence and such care that the coin becomes the true value of that company as the company grows.
Well, that's certainly interesting to see how it develops and has a very promising future there. In the last minute we have, what else should we talk about that we didn't cover?
Well, like I said, in my opinion, I would just try to rehash as people are concerned and for a variety of reasons in terms of their learnings and the way they've come to know what money is, that how real is this? How important is this? Is this just a fad? And I can say to you that the behaviors of those that have grown up with digital currencies, virtual currencies, and now cryptocurrencies as a method for them to transact and communicate in their digital worlds, it's not only real, it is the preferred method to do so. The people, in my opinion, have spoken. This is what they want. And the immutability of the blockchain, the ability to have transparency and to be able to create a currency that no organization, including a government, can lend against and create a deficit or the types of challenges that we see occur with fiat currencies. I think this is the absolute future, and then people need to consider it, given that it's what the people want. And I think it's the next stage in the new smart economy.
I agree. I think it is too. As we close it out, how best for listeners to get back in touch with you?
You can reach me at william.davis@ldjcapital.com or link in with me. I am creating my digital inner sanctum for those that are serious about this and that understands what the impact is so that we can communicate on LinkedIn consistently. The opportunities we see will be presented there. The events that we create and the groups and the camaraderie that we're building will all begin there. So I hope they even link in with me on LinkedIn or they can reach out to me directly if they choose to via email.
Well, we'll put that in the show notes. Thank you for taking time to join us today and hope to have you back in a few months for a follow-on to dive deeper into these topics.
Excellent. Thanks for having me. Have a wonderful day.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.